Welcome back. Let's shift focus now to all that has transpired on Deal Street in the quarter gone by. The first quarter of 2016 has witnessed strong deal momentum and surpassed the corresponding quarter of 2015 by 27% in terms of value and 16% in terms of volume. M&A transactions were alone valued at about $8.9 billion, indicating a 31% growth. I'm joined by Prashant Mehra, partner at Grant Thornton, to take us through the details. Hi, Prashant. First question to you. How was the first 3 months of 2016 as far as Deal Street is concerned? And also give us a breakup in terms of how sectors fared individually.
Yeah. Hi, Kritika. With the surprising low activity in January and February, March saw some tremendous momentum, thus picking up for the quarter. And the quarters ended at actually about $12 billion, which is, as you mentioned, a high growth rate both in terms of deal value and deal volume. Special mention for the inbound activity. So certainly the Make in India initiative is working. It's clocked at about $3.5 billion, which is a significant growth from last year. What we've also seen this quarter is something which has been much awaited, which has been the major consolidations happening in the domestic M&A market, which itself clocked a huge number and has grown by about 66%. Private equity continues to do well at about 27%, and there is decent amount of outbound interest as well. So overall, a very good quarter, and I think the right ingredients are there for this to even grow further. If we look at the sector spread as well, the core sectors, which is energy, telecom and automotive, saw some big ticket investments in the quarter, and together they contributed about 50% to deal values. There was some nice volume of transactions within the banking and the IT sector. And finally, private equity, they're much favorite. The consumer technology and e-commerce sector also attracted about $1 billion. So overall, a very good quarter with the right investments coming in the right place.
Prashant, what's the outlook in that case going forward? Because as you said, banking, IT, e-commerce continue to lead the roost when it comes to attracting investments. But what about the more heavy capital sectors like infrastructure, power, which need investments?
So, Kritika, very good question, and I think investments will come around in these sectors. These are core sectors. There will be some consolidation happening there. We've already seen sound bites of something happening in the steel as well as the cement sector, which should probably close sometime in April. As far as infrastructure as large is concerned, we definitely need to see government also investing in these sectors. That would really trigger, more foreign investment coming in. I think the government, what it is doing good from its side, it's quickly clearing projects. So, things which were on the files are now actually on ground. So, once government policy initiatives which have already started happening and government investment also comes in this sector, I think we'll see a fair amount of private investment activity here as well.
All right, Prashant, appreciate you joining in on this show. Thank you so much for taking us through the very crucial details. So that's the activity as far as Deal Street is concerned. But time now for a very short break. Do not go anywhere though. We are awaiting the Feb industrial output data and the March retail inflation numbers in a very short while. In fact, we'll have a star-studded panel who will help us decode the numbers, and Lata Venkatesh will join in to take the conversation forward. Don't go anywhere. Stay right there.